See the question. It is given subtracts profit for the year ended 30th September 2000. Profit for the year ended 30th September 2000 means for which time period this is. Year end means what they try. For which period this is. I'm asking profit for the year. It's 2 million means this is from when to when?
Acquisition, ma'am.
Acquisition profit for the year. Are you understanding or you're not? Don't want to unmute.
Last year September to this year September.
September will you take or October?
Sorry, October. October to September.
2003, right? 3 to 30th September 2004. Okay. This time period is 2 million. In this, how many number of months is pre-acquisition and post-acquisition? When the acquisition happened actually?
9 and 3.
9 and 3. So 9 is post. And you know this is 3. That is 3 is. So in the current year's profit, how much is post-acquisition there?
$1,500.
Exactly. So out of 2000 into 9 by 12, it is 1,500 is post-acquisition. I felt so bad after got, okay, this is the mistake. See here, this 1,500, how we got it is as profit, which is included in the reporting date into instance that the 2000, whatever is, it is matching. See, this 2000, how we got is equal to any doubt in this part. Since the current year profit and at acquisition profit is coming to 2000, this confusion happening to me. I don't know, you might be very clear in this. Any doubt in this part? If I then and there so that I can finish this problem. Any doubt in this part? No? Okay. So in this 3,500, 2,000 current year profit is there. And in that current year profit, only 1,500 is post-acquisition. Got it? 1,500 is post-acquisition. So out of 3,500, 1,500 if I remove it, at the date of acquisition itself, in the retained earnings, 2,000 is lying in the figure. Since current year profit is 2,000 and what is the at acquisition date is 2,000, I got a confusion, okay, whether the problem is wrong or they missed something. Okay, because of the same figures. I got a mistake, so you should not get it. That's why I'm insisting here 2-3 times. Okay, let us go and prepare the financial statement. It's consolidated financial statement. But when you see here, they didn't ask the consolidated profit or loss. Instead, they've asked only revenue, cost of sales, and finance cost. So you're not going to prepare the full-fledged consolidated financial statement. Instead, you're going to prepare an extract only. So this is A. Write here as answer or solution. Number 35. Okay. And This is the information. Now I'm going to start with you. They asked only 3 items. What are those 3 items? Number 1. To go with revenue, yeah, tell me. We'll see the adjustments later. Otherwise, what we do?
Add parent and subsidiary amounts.
Yes, parent and subsidiary, that is 62,600 and 30,000. This is step 1 always. Yes. Will you add the entire profit of subsidiary, 30,000? Or post acquisition?
Post acquisition.
Post acquisition. So 30,000 into
9 by
yes. And by 12. Okay, done. This is done. Anything else? This is as of now, you know what we have to add it. Then apart from that, we have to see is there any adjustments. Okay, let us see what other adjustments. Normally, what we'll see, if there is any, something will remove, no? What we remove it? We'll be removing something.
PUP.
PUP. What PUP? PUP from cost of sale, no more money. Will you remove from revenue? Cost of sale only will remove, right? Will you remove from revenue?
No revenue.
Let's see, let's. So nothing to do with the first adjustment, right? First adjustment, yeah, first adjustment to cost of sale, that is depreciation. Where it is somewhere given here. Third adjustment, read it. Sales from plastics to subtract throughout the year ended 30th September 2004 had consistently been 300,000 per month. Plastic made up for 25% on all these sales at 600,000. This part, see, this part of markup and all already adjusted. This will come in your cost of sale. This part will come in cost of sale. What is this 300,000? What is this?
intercompany.
Intercompany transaction. Will you include in your revenue? 300,000 per month. So minus 300 into how many months will you take? Throughout the year you have done. But which you will take?
9.
9 into 9. You have to take it. 2,600 plus. Brackets are closed one. So 82,400 is the revenue. Any doubt? Any doubt here? Whenever this Excel sheet is shared, any doubt, immediately refer the formula column. That's the reason for sharing Excel sheet. Everything is there. I can ask you very clearly, take the screenshot and revise it on. But why I'm sharing the Excel sheet, check the formula bar whenever there is a formula inserted, whenever you're not clear with the file. Okay, and whenever downloaded, keep that file separately. Don't disturb it. Make one more copy and share, study from that. Because by mistake, if you do any alteration, then it will be very difficult. Yeah, whenever an Excel file is sent, download and keep a master file separate. Keep another file for your revision. Yeah, you prepare it on your own. So 82,400. This piece of advice and all sometimes it will happen because of the side effect. Battle. Taking and not taking is up to you. So cost of sales. Okay. Coming to cost of sales, the second one. See, they asked you to prepare cost of sales. Yeah, we'll go back here. Tell me cost of sales, what I should do first.
Add.
Add what? Will you add both the amount as such? I want quick answer.
Post acquisition for the subsidiary.
Exactly. For subsidiary, it's post acquisition. That is 9 by 12. So 45,800 plus 24,000 into 9 by 12. So I 800 plus 24,000 into 9 by 12. Then what else? Is that the only thing? What else is there?
PUP.
PUP? Yeah, PUP and what? The cost of the sale, no? $300,000 every year they were selling. Yes, every month they were selling, no? Are you getting what I'm trying to tell? This 300 by 9. This is your intra, which includes profit. This is intra company. Correct? So the same you have to show it here, right?
Yes,
Yes,
ma'am.
ma'am.
Yeah, 300 into 9 and remove the profit. How will you remove a profit in an expense? Reverse it. In expense, you have to remove a profit, means you have to add reverse treatment plus PUP we did somewhere. We didn't do anywhere. PUP. Here. Yes, group retained earnings, inventory 120, that we have to take it here. Why we are adding here? Because it's an expense. How to cancel it? Add. In expense, you have to add it. Okay. So 120 PUP. And what else is there? What else? Anything else? I highlighted depreciation. Depreciation, you will add or subtract in cost of sales. Cost of sales is an expense item that. So plus, now listen. I'll again write here. This is for your understanding. This is intra-company transaction. This 120 is PUP. And this 100 is what is your depreciation. So all together, I'm taking here. So I'm going very slowly. Remember. Name only I'm putting in the formula. 100 into 9 plus 61,320. 1 million. $61,320 cost of sales. What is the next thing asked here? Finance cost. Okay. Why wanted the finance cost? Actually, it's a reason if they are asking something must be fishy there. And they are asking finance cost. Any guess what they want you to get confused with?
Unwinding discount.
Unwinding discount, ma'am.
Let us see the problem. Any finance cost is here. So what we
Yes,
generally take? 200 is there. This 200 aram, we'll take it or finish. Like that, we will take it. That's the intention. So this is 200 plus unwinding cost. You can see here in your group retained earnings. So group retained earnings, what and all, just this is a hint, remember. In group retained earnings, what and all will affect your SOPL will also appear in your group retained earnings. The same items you can pick and write here. If it is appearing in minus in group retained earnings, it is an expense. Okay, so take that in an added form in the expense unit. No, can you hear me?
Yes, ma'am.
Yes, ma'am.
Can you hear me? Sorry, because I cannot hear you. It came on hold all of a sudden. Okay, see. So E is a negative figure. 135 unwinding discount is a negative figure and it is reducing your retained earnings. So these two are expense items. So it will definitely 100% will come in your SOPL as an expense only. That's why in cost of sale, can you remember this 120 we have taken here? And now I'm going to take in finance cost also 135. Both are my negative figures. So I'm taking it here. So it's equal to minus of 200, I'll just take plus 135. Okay. So in this 135, you know that 200 is given in the question itself, whereas this 125 is uninvited. Discount. Can you understand that? Some link will be there. See, group retained earnings, negative figures. Where we are actually adjusting this, we are reducing it from the retained earnings. Obviously, it should be there in your SOPL. Keep that in mind. Okay. Could you understand the link between that two? If you don't, also I'm not going to ask one second. Better go first.
Understood, ma'am.
Okay. So now it's one B is what it's asked here. Prepare consolidated financial position. This is not extract. Completely we are going to prepare. Okay. So of plastic group we should write. So first we'll be having as usual assets. And in assets, the first item will be non-current assets. You can have an idea what are the items will appear. If you see the non-current assets, I have PPE, then you'll be having goodwill also. Then current assets are there. So these are the three items: investments and loan note. Loan note from subtract. What you'll do? Will you take it? Loan note. Any loan given to or taken from subsidiary and parent within the group, will you take or not?
Yes, ma'am.
You will take.
It will come as finance cost. I don't know.
What is this? 10% loan note. Any loan between the group, this within the group. Will you
Oh, no.
consider it as a loan?
No, ma'am. Intra, ma'am. No.
Intra-group transaction, loan, trade receivable, trade payable, sale, whatever. We will not take no within the group. Any transaction is happening, we will not show it in the consolidated financial position. According to the economic way, it is considered as a single unit, right? So here, non-controlling, non-current asset will be having the first item as, or else I just leave few lines only. That's it. I'll leave few more lines and I'll write the next one, that is equities. And so under equity, if I see here, I have equity share. And you know, there are some share issues. So leave 2-3 lines lavishly. And then you have revaluation surplus, then retained earnings part is there. So leave enormous space for equity. And then non-current liability, loan note 20. Will it come? But one more loan note is also. Two loan notes are there, right? One is intra, one is something different, I guess. So loan note will come. Here it will come. Okay. So just I'll leave lavishly some space, non-current limit. 2-3 lines I'll leave and I'll take current liability. So this is our goodwill. So one by one. So the first one I'm going to write goodwill as usual. With space or without space, you just take it. So I'm just going to map my working note 3. right? Working out 3 is for goodwill, so 5,700 I'm marking here. So here while writing, you just write. Second, we have to see what is given in your financial position. Second is non-current asset. What is step 1? Under non-current asset, the first item is PPE. What I should do? Tell me the first step.
Add both.
Add both. Don't buy 9 by 12 and all here. Asset, no 9 by 12. Nothing for that asset. Only you pay consideration. So don't do 9 by 12. So 18,700 plus 13,900 will be my first adjustment, first step which I'm doing. 900 plus, no, 18,700 and 13,900. So 18,000. After which, what I should do? Anywhere you can see anything about PPE, we did it. Something revaluation and all we saw.
Yes, ma'am. Revaluation. Second working.
Can you see in the net asset part? Yes.
Yes, ma'am.
Yeah. What and all you can see in the net asset part at the reporting date.
Fair value, revaluation, depreciation.
What are we will completely come there. Property at the reporting date you have to take property 4,000 fair value, depreciation is 100 and revaluation property is 600. All these three will come there. Like the same symbol you have to take it. You need not change this symbol. How it is appearing here, same take it. Fair value of the property is 4,000 increased and depreciation charges 100 increase in depreciation. So it's an expense. And revaluation of property of subtract is 600. I told at the time itself, somewhere we removed the 600. At one point, we removed the 600 and did a calculation. That time I said, here, can you see this? This part? Here, we removed subtracts post acquisition reserve. In that, the 600 we removed it. And I told that time itself, the 600 we'll show it in asset. You need not take it here, I told. So how to do it here? This three items, what and all is appearing here, take it. Okay, so here. What is this? Under PPE, 18,700 plus 13,900. Then what else? Plus one add here. This one. 4,000 plus so plus 2 minus 100 plus 600. Out here you can ask. Any doubt in this part, you can ask it. 2,700 plus 13,900 plus all this. That is this 4,000 plus this 100, that is minus 100. 100 which is 37,100. Any doubt in this part?
No, ma'am.
Ma'am, what is it 600, ma'am?
600, you can better read it once again. See here in this paragraph. Can you see this paragraph? The policy of plastic group is to revalue all properties to fair value at each year end. On 30th September 2004, the increase in plastics property has already been recorded. See, every year they will, fair value means what? Year end we will always revalue and the difference we will write it as appreciation. And this appreciation is a revaluation gain and we'll take it to revaluation surplus. This is the practice of fair value under IAS 16. Right. So accordingly, when they are revaluing it, the increase in plastics property, that is the parent's property, already is recorded in your financial position. But 600,000 increase in subtracts property is not recorded. Can you understand? Yes, Dhru? Can you able to follow that 600?
Listen, by mistake, I left the meeting, ma'am. I just joined.
Okay. Don't do this mistake again. Now listen. See this paragraph, it is mentioned here. The policy of plastic group is to revalue all properties to fair value at the end of each year. as per IAS 16 fair value method, we have two methods. So in the subsequent period, at the initial recognition of any assets in IAS 16, will be recognizing at cost. Whereas in the subsequent period, you have two options. Either you can recognize it at cost or at fair value or revaluation method, whatever. So here the revaluation, the company is following fair value method. That is at the end of every year, the asset will be matched with the market value and then it will be recorded in the books of accounts. Likewise, while checking, plastics properties, the increase and all will be there. No, that has been already entered in the books of accounts. It seems. That is in your financial position. What is given in the question, there itself the plastics property are already revalued and written. But subtracts property, an increase in 600,000 was missed out. It is not recorded. Could you understand that? Increase in asset,
Yes, ma'am.
where and all it will affect. Increase in asset.
Revaluation. Revaluation gain.
Listen. First, it will increase your assets, so it will affect your balance sheet. And this increase 600 will go and visit in your retained earnings. Am I right?
Yes, ma'am.
That's what we have taken the 600 here. But while considering retained earnings, okay, this retained earnings actually in subtracts post acquisition reserve, we remove it. But we have taken the 600 in post acquisition reserve of NCI. Okay, we have removed here and taken there. Why? Because it is given very clearly. Plastic has recorded it's already the retained earnings already it includes that. Only if you take post acquisition reserve is 1120. What to say? The 600 we have to remove here. Instead, we have to show it in your asset side. This is the only thing. Okay. So it's coming to 37,100. If you're silent, I will assume that you are understanding and I'll continue.
Yes, ma'am. Yes, ma'am.
Yeah, done. So PP is done, goodwill is done. What is the next asset? So in the question, if you cannot put a tick mark and all, in ACCA paper, you can do it definitely. So non-current assets PP is done. Investment is 10% on loan note. Ignore this because this is intra. 10 from subtract, no? So it is intra and this 1,000 belongs to intra. So what do you mean if a loan is appearing in the asset side? What do you mean by that? Whether it is given or taken?
We gave, ma'am.
He gave. So this 1,000 is, hey, who is this? Some voice I could hear.
Datta, ma'am.
So this 1,000 is removed and it is appearing in the asset side. If you have given a loan, obviously this 1,000 should also be removed. No, because the other party had taken from you. It is intra. This is also intra. This both should be removed. Okay, remember. Now, so this investment I'm ignoring. What about this current assets? Current asset is 9,000 and 4,000. Do I have any adjustment in current asset? Yes, I do. What is it? It is in working note 4, not working note 4, adjustment 4, something related to trade receivable. Let's take it. So tell me what is the first step in current asset? What I should do is the first step.
Add 9,000 plus 4,000.
Don't find 9 by 12 here. I'm stressing again and again. Don't do that. One in earnings part, you have to do it. Assets, for the assets only you are paying. So consider it. So don't do 9 by 12 here. So it is 9,000 plus 4,000. After which I should come to 4th para. Why this 4th para? Because it's talking about something trade receivable. Let's see here. So plastic had a trade receivable balance. Okay, before that, what and all will come in your current asset? Trade receivable, trade payable, trade receivable will come. Won't the closing stock will also be coming, no? Closing stock, that is inventory.
Yes, ma'am.
Yeah, inventory will also come. So we'll see everything, what and all is. Read this para clearly. Plastic had a trade receivable balance owing from subtract. Trade receivable balance owing from subtract means subtract has to pay plastic. So plastic have to receive from subtract 1.2 million. So since we have removed 3 zeros, we can take $1,200 plastic should receive from subtract as of 30th September 2000. This deferred to the equivalent trade payable of subtract due to a payment by subtract of 400,000. What do you understand by this? What is this 400,000?
Cash in transit.
Exactly, cash in transit. What they are trying to tell, I'm the parent, plastic, and you are the subsidiary. I'm telling you should give 1,200, but you are telling no. I've already paid 400, but I didn't reflect in my books of accounts. Okay, so we call this 400 as cash in transit, and we have to assume that it is received. Okay, we have to assume that it is received. So remember that. Okay. So normally when it is received means we'll add that. No, we'll add 400 and we'll deduct 400 from the what is that from our trade receivables. But here one more addition is given. See, both entities have overdrafts rather than positive cash balance. They have a negative cash balance. So what do you do? If you get this 400, what we do? We will add or deduct. How we treat it? If it is a normal balance, we will add. It is an overdraft balance. So cash in transit, if you assume as received means, how will you do?
Ma'am, won't
Minus
we,
400.
Yeah. What should
won't
be
we
done?
We'll
minus
take minus
400, ma'am?
Exactly.
minus
Minus
400
400.
twice.
Minus 400 twice. Why minus 400 twice?
One for receivable and one for overdraft.
So instead of writing 400 and 400 twice, can I write like, okay, how much is the receivable balance still? 1,200, 800, right?
800.
800, no, 800 or what
Eight.
you will take? So can I take like this? Won't it be fine? Do instead of writing 400, minus 400, minus 400, minus 1,000. Can I take it like minus 400, minus 800?
Yes, ma'am.
This is also okay. And apart from that, inventory also plays a role, no? In inventory also we have something else which need to be removed. What is it? Whatever this 120 removed in cost of sales should be removed here also. Am I right? PUP.
Yes, ma'am.
When the higher level problems you solve, I'm not expecting 100% you will understand. At least few adjustments you will not understand. At least maximum adjustments you should be able to understand. This 120 and all PUP, unless you do again and again, you will not get a track. This is PUP. And this is nothing but 1,200 minus 400. Okay, this 400 is what cash in transit, and this is intra. In this, it is intra. Sorry, this is cash in transit. Okay, this is 400. 1,200 minus 400 is the actual trade received. Okay, and here this is intra. This is completely intra. And this 400 is cash in transit. Why we are detecting? Because overdraft balance. Okay, fine. So this is how the complete computation will come to current asset. You have to go through once again. Okay, so it is 9,000 plus 4,000. Okay, even while doing, I took plus 400 and I got complete of striking in my notebook. Because one place, if you do a mistake, no, it will have a replication many places. It looks very awkward also. And especially the current asset part, I did more of overwriting because of the current, I didn't read the overdraft balance especially. So if it is an overdraft balance, you have to reflect it. Clear? So this is regarding current asset. Okay, done. So that's it. This is my total asset. I have to find the sum of this all. Okay, so coming to equity now. So equity part, right? So assets are over. Coming to equity, first one is equity shares. So I have equity shares. So, but you should remember that in this problem, we paid a consideration where share exchange was also there. So remember that. So I'm going to take equity under the first one. Share. This complete this part, we will take only the parents amount, right? So tell me how much is the equity part here? Tell me how much is the equity first, which you have to take. Yes. And one share is $1. That is your fair value. Your what to say? That is a face value. You cannot record equities more than the face value. Market value should not be recorded. Any excess amount you transfer means should be taken to share premium. Remember. Now tell me, am I audible?
Yes, ma'am.
Yeah, tell me how much we'll take it for equity shares. First step.
Ma'am, since it's
Only pair.
$1 per share, I mean,
Only parent, that is 10,000 we'll take. Somewhere I wrote in handwritten number of shares. What is this? This one. What is this? I said when it is required, I'll come back. What is this?
ma'am, 4,800. Like you're exchanging the shares, ma'am.
You are issuing, right? You're
Yes,
issuing
ma'am.
this 4,800. And what is the fair value or face value of one share?
$1.
$1. So it is 4,800. That's it. You cannot put how much ever you would have issued for $10 also. That doesn't matter. But you have to take only 4,800 here. So this is equal to 10. Is 4,800. So this is the value of equity shares. Then, but 4,800 worth of shares, did I issue it for $1? How much I issued it for?
For 3, ma'am.
3 means to say, is it not
2 is
14,400? 4,800 worth of shares. Instead of giving it for 4,800, I issued at $3 per share. $2 extra I issued it, right? It is 14,400. Are you getting
Yes, ma'am.
Premium now.
premium? That is share premium. So I have to write here hidden adjustments, be careful. And remember this share premium. I will take 14,400 minus 4,800. What is that? So you understand. This is your purchase consideration, 14,400 minus 4,800. So 9,600 is a share premium. This 4,800 you've taken here, right? So 600 we have taken here already. So the remaining will be taken as share premium. Okay, then coming to what else? Revaluation surplus. Do we have any revaluation surplus fund? Anything revaluation surplus we have this year, which is not recorded in the books? So you asked it out also.
600, ma'am.
600. What is that 600? See here, increase of 600 in the value of subtracted property has not been recorded. Now recorded once. Adjustments will appear twice. So it has been added in your PPE already. So the other side, it will be added in your revaluation surplus also. Oh, already you have a revaluation surplus here of 2000 in plastic. Plastic already they told no, plastic had recorded the revaluation surplus, but subtract have not recorded. So you have to take that 2000 first. Does the 600 belongs entirely to you? Correct? Does it belong to you? Or the NCI is having a role in it? Did we share the 600 with NCI already? Yes. Did we share it? Did we
Yes,
give
ma'am.
this? Yes, this amount in this 2000 post acquisition profit, which the 600 was included already. We have settled the NCI. NCI had taken their share already. In that 400 see here, out of 2000, 20% is given. In this 2000, that 600 was included. Okay. So here, since revaluation surplus is separately appearing, we removed in one place where 600 somewhere we removed it. Yeah, see here. In retained earnings, the 600 we removed, and instead we are showing it in our revaluation surplus. I think you get have a revaluation surplus count separately. And like no revaluation surplus is actually you're not supposed to add with retained earnings. Revaluation surplus should come separately as revaluation surplus. Yes, would you able to understand this part?
Yes, ma'am.
So yes, 6,480. 2,480 is your revaluation surplus. Okay, then coming to the next one, retained earnings. Which value will you take for retained earnings?
Working note 5.
Note.
Work 5. $7,000. Rapid asset. That's it. Then what something one more else will be coming here now. What is it?
Non
NCI.
NCI.
Should be by hearted by this time. 4. Correct? NCI is working on 4 no, most of the time. That is an order. Especially for SOFP, this is the order. Okay, at least no problem. If the order is missing, I don't know. I don't think it will be a problem. 4,900. Done. So coming to NCL, what NCL you have here? Non-current liability. Non-current liability, 10% loan, 2,500 and 1,000. Which you will take?
Ma'am will take both and minus 1000 from it, ma'am.
Exactly. We will take add both and deduct 1,000. Why? Because it is intra. Or else you just take 2,500. Yeah, both will do. Okay. So I'll write it is 10% loan. 500 plus 1,000 minus 1,000. Minus because this is intra. The intra-group transaction you're not supposed to take. So you will take only. Then non-current liability over. Anything else is there? Yes, you have current liability, trade payables. Okay, trade payables, what is the first step? Last adjustment, tell fast.
Ma'am, minus 1200.
You have to
Intra-
add, right? 7,900 plus 4,400, right?
Yeah.
Okay. Yeah.
Minus.
Then
Then minus
then
the intra. minus intra transaction
Interest transaction is how much?
1,200.
1,200 in that cash in transit is there. Now, how much is the cash in transit?
Cash in transit for 400.
400. That 400 what?
Minus 800 also, ma'am.
Minus 800, minus 200, minus 800. Okay. So here in current liability, trade first you have to add it. Add the value 7,900 and 4,400. So 7,900 plus 4,000 minus 400 cash in transit minus 800 in transit. Okay. So again, I'll tell you this 800 you received. How you got it? This is the difference between 1,200 minus 400. And what is this 400? It is cash transit. The same 400 is cash transit. Okay, trade payables, instead of writing trade payables, you can keep it as such because cash in transit, it's actually a overdraft. You can actually show it as cash or bank overdraft or something. So otherwise we'll deduct here and show that's it. Okay, trade payables, this is sequence. It is 11,001. What else will come in your current liability? That's it or anything else is there?
Revaluation already taken.
Who can tell us?
Deferred.
Exactly. Deferred consideration, which by Jan, which is not your non-current liability. We have to pay after 1 year, it is a non-current liability. Deferred consideration, you have to pay by Jan 1st, which is 1 year. As deferred consideration. Go to the consideration part here. How much is the deferred consideration?
1,800.
1,800. So you are not paying this 1,800 immediately, you're paying later. Or any interest for that. Unbinding of this for something you did. Where is it? What is this 135? Is it not related? Yes.
Discounting the deferred consideration.
Yeah, while paying after 1 year, yeah, take this 1,800. No one will give because the value is reduced there. Yeah, and interest also for that always. Okay, so this is equal to 1,800 plus 130. So this 1,800 is deferred consideration, which you know. This is the finance cost of it. That you have to show. Finance cost will appear twice, no? So once in your net profit, that part where is profit and loss, and another time it will actually appear once again in your current liability. So 1,900. So this is your current liability. Thousand 483, 1,480. Done with this problem, and in the next class I'll be starting with chapter 20, that is investment in associate, and we'll be solving only one problem. As far as I noticed, most of the time it will be consolidated financial statement, but not with associates. And even if associate is coming, it is just a line of adjustment. So I'll be covering the theory as well as practical part. So since I think already I've scheduled the class, just a minute, that is on 24th, right? 24th, you have my class between 12 and 1. I think you're aware of it, right? The class which I missed during your ACCA training. that I've scheduled it on 24th Monday 12 to 1. Clear? Yes, people.
Yes, ma'am.
Okay. As of now it's only 12 to 1, but okay, I'll stop.